A place where I could do the stream tonight, and we have a little apartment suite with a little kitchen, and it's sort of all open concept, and I got my 3 kids up there, and it's chaos. So I figured I'm not going to do it in the hotel suite tonight, and I went to the lobby and it was too loud, and then I went to the gym and I'm like, what do Americans need not do? Work out. So like, of course the gym is empty here, so it's a good spot to do it. So I thought, hey, why not? If you guys are here, give me a thumbs up and say hi. If you have a question, just throw it in the comments below. I have maybe 49% battery and I didn't see a plug anywhere. There's one over there if I was willing to sit on the floor. So we could do that as a worst case scenario. But anyway, so today's video is about a property that I have under contract in Stewart, Florida. Beautiful, touristy, artsy, weekend festivals, very high end, near like Jensen Beach and Jupiter and West Palm Beach. It's just a super posh area. We got a property under contract. I'm super excited about it. It needs a full overhaul, but it has the potential to be over 40 units all said and done. So there's quite a bit of upside there on this one. It's like basically an 8-figure deal, and I've locked it up for well under 5 million. So it looks like a good, there's a good 4 million USD in upside on this one. So it's an interesting project. Could be a good one to make back some of the stock losses we've had lately. If you guys have been following me, you know that I have 2 portfolios. One that's, my Canadian utility blue chip, solid dividends, stuff that I can feel good about and sleep at night, and it provides consistent FIRE income. And then I have my interactive broker stuff that I share on my my Instagram pretty much daily. And that's my like options trading where I speculate a little bit more. I invest in things like growth tech, that kind of stuff. And I invested in PayPal. I'm gonna be honest, I'm gonna come clean here, guys. I invested in PayPal, I invested in Facebook. I didn't get into Facebook until probably about 220 after the first initial dip, 221, I got into Facebook. And I've written it down now, it was like 180 at the low. It's bouncing back. I believe in Facebook. It's a 13 price to earnings ratio. At that ratio, it's basically a value stock. As in, like, if they don't grow anymore, they have so much cash there that they should start paying a huge fat dividend to all their shareholders. I'm really bullish on the metaverse, but forget the growth side. As is, where is Instagram and Facebook, huge value there. They aren't even monetizing it in ways that they could. So anyway, hugely bullish on that, but I've written that down. And today we had a little bit of a bounce day. You guys know I've written that down. I'm outperforming my benchmark on that portfolio, which is the NASDAQ. I perform against the NASDAQ. Stay tuned, by the way. We're gonna get into the numbers on that deal if you guys want. It's up to you, whatever you guys want to talk about. But I thought it was kind of clickbaity. Thought I'd throw it in as a title. If you're interested to see what I've been up to here in Florida, been working on this deal now for a couple of months, a lot of back and forth negotiations. I came in well under $500,000 under asking, and I didn't know what would happen, and we kind of been playing around with it, and we came to a number that I was happy with, which is less than $500,000 under asking, or sorry, a little bit over. But yeah, it's been beautiful. Yes, as we speak, I'm negotiating on a beautiful off-market estate in the Bahamas right now. It's like almost 8,000 square feet. We're very excited for it as well. So that will be a big, nice, awesome project. Yes, the plan still, as of now, is Canada, Bahamas, Florida. Bahamas being the primary tax residency, place where my primary residence is. Florida being a place that I enjoy going to and spending time in. And then Canada, obviously the place to escape the rainy and hurricane seasons in Florida, etc. It's just nice to get away as well. And Canada is so beautiful. Like where I grew up on Lake Huron, some of the nicest waters in the world. The only thing that really comes close is the Bahamas. And I'd be lying if I said that I wouldn't miss if I didn't come back for my summers in Canada. So summers in Canada, definitely. But the tax climate in Canada is not great for someone at my level. But luckily, this year now, I just rolled in my corporation all these huge losses, which nice thing about rolling contracts is I'm still with the stock. I've now gone longer on a lot of these positions, but I'm able to realize the loss and write it off. So in this case, I think my portfolio is down it might be down like 14%. The NASDAQ's down it was down like 20%, and I was down like 14%, which is still a lot. Like at my portfolio size, that's well over 800 grand in that portfolio that's down. So I rolled that loss, locked that $800,000 in. And I was actually more than that because I had some gainers too. So I think I think I rolled almost $1 million loss on paper. And yes, someone just asked a question. Do you think the real estate market is going to crash? Is it a good time, buying time because buyers are spooked? So right now there is a bit of a lull in the Canadian, or specifically Southwestern Ontario real estate market. We are seeing a little bit of a pullback right now, less showings, less competition. Market is still super, super hot. But talking to a few agents all around from Oshawa to KW to London, to Sarnia, just to get a feel for what's going on in the local market, take the pulse. The pulse right now in my local market back home is, again, still overall bullish. We jumped 15% since the fall when I sold more than half my portfolio, which sucks, but you can't time the market. I'm talking about that today too. I made a big change to purge a lot of my holdings today and rebalance my portfolio. It was a nice green day, a nice up day in the stocks, especially in tech, and I took the opportunity to rebalance. And I loaded up on my VIX hedge, my volatility index. So I personally believe the stock market's in for a bumpy few months to come. I think oil isn't even, gas prices aren't even done yet. It's just the start of what's to come. There'll be a lot of volatility over the coming months. One thing we know for certain, every time oil spikes 50%, there is a recession that follows within 24 months. So we will 100% be in a recession in the next 24 months. That's a fact. There has never been a time in history ever where we've had more than a 50% spike in oil and not had a recession follow. So it will happen. On top of that, every time you raise interest rates 2, 3, 4, 5, 6 times, which they're planning to do over the next 24 months, you get a recession. Also, inflation, the highest it's been in 30 to 35 years, late 80s type inflation, which we thought would never happen, is happening. And so those three things together on the back of the pandemic, and the pandemic recovery leads to, I think, a potential to wipe out a lot of the growth that we've seen in the last 24 to 36 months, which means potentially a 25% pullback on the S&P 500. I'm currently not in margin at all. My entire margin is ready to go. I'm just sitting a little bit on, I have some equity positions, I have some VIX on to hedge those equity positions, and I have cash reserves ready to go. I continue to invest in real estate. I have a competitive advantage in real estate. And so I will continue to look for opportunities like this one in Florida that I'm talking about today. It's something that if I can make a couple $1 million on a deal, it can make a lot of sense to take those kinds of deals down. I can get returns that are extraordinary. Same as in business. I can get returns that are extraordinary. The stock piece is designed to preserve wealth and designed to slowly grow wealth passively. They're different means, but many buckets and many streams are important, I think, in wealth diversification and preservation as well as growth. So yeah. ADW, how are you doing? I'm doing very well. Thank you for asking. Manib says, you're still moving to the Bahamas? Yes, 100% still moving to the Bahamas. Hey, Mike, do you think the real estate market is going to crash, or is it a good time to be buying because buyers are spooked? So to answer that question again and follow up again on depends which market you're in, I guess, is the first context, because every real estate market is different. As an example, in the Bahamas right now, they're hurting. The hurricane, 2.5 years ago or so, it wiped a lot of things out in some of the islands, a lot of key infrastructure, and then on the back of the hurricane came the pandemic, and no one was traveling. No one wanted to get nose swabbed and deal with all that crap, and just people were afraid to travel. So it's been decimated. Like the Airbnb numbers there are horrible. So you got to be a bull and you got to be aggressive in those markets to get really deep discounts, but you can definitely do it in a way that you can't in my market back home. So yeah, I would say that there's opportunity in different markets. It just depends. Like over the same time period that Canada has doubled in price, the Bahamas, I would say, has dropped 50% to 60%, depending on the area you're looking in. So what would have been $1 million house in the Bahamas, if you would have sold your house in Canada for, say, $600,000 at the time, now your house in Canada is worth 1.25, and that $1 million house in the Bahamas is worth 450 to 500. There's a huge arbitrage here in some markets. Costa Rica, as another example, down over the last year, 2 years, 5 years, relative to other markets. Puerto Rico, again, one of the top 3, if you're a stock trader or a crypto guy, it's one of the top places to be. It's on the top 3 of all the lists because you get the access to US equities with no tax implications. It's actually better for options trading than Bahamas. Bahamas is better, I think, for crypto and has some other unique advantages to it, specifically that it's super close to Florida. But yeah, I mean, there's huge advantages to when you're trying to select where do you go and what do you do, the Bahamas, most interestingly to me, is that you can spend 90 days a year and 275 days a year out of the Bahamas and still qualify for tax primary residency. You're still a tax resident there as long as you don't go to any other country over 182 days. So you split your 275 days that you're, if you do want to travel, that you're outside of the Bahamas, as long as you don't spend over 182 of them in any one country, you're still a tax resident in the Bahamas. So you could do, in theory, 5.5 months in Canada. I'm just running numbers, like you do whatever you want. 5.9 months in Canada, 3.1 months in Florida, and 3 months in the Bahamas. And you're no tax-free resident in the Bahamas. There's some really unique advantages you can do there. The Cayman Islands, you can't do that. They want you to stay. You got to live there to get those tax advantages all the time. The Bahamas does too. You got to invest to buy a property there and live there. But you're allowed that ability to, if you wanted to, as an example, you could live in the Bahamas, Friday, Saturday, Sunday, and then, take a 30-minute flight, like literally people commute longer than that to work, to Miami or West Palm Beach or whatever, and you could live Monday to Thursday in your property or wherever in Florida in first world amenities. And you're literally a 2-hour boat ride or a 30-minute flight from first world amenities in the United States without any of the tax implications of being in the United States, because you're, again, living in the Bahamas. You're just visiting. And so it's all about the narrative of how and the perspective of where do you call home. And the rest is just you're visiting. So there's, you gotta be very careful about how you do it, and et cetera, and so forth. But, tax planning is important. Talk to your attorneys and your accountants and whatever. But there's some really interesting offshore banking advantages. And it's something I've been looking into. For the foreseeable future, I will be a Canadian tax resident, probably another year or two. I got a lot of business operations at home. I got properties still, 6 rental properties still to sell, and a bunch of my primary residence. So I have 7 properties still back in Canada right now. Potentially more deals still lined up with people that I might be taking down. If I'm gonna be living in Canada, I will continue to invest in businesses there. And I have a business there that I invest in as well, which I need to wrap up and sell that business too. So there's a lot I have to do back home before I'm ready to move, but it's on my, we'll call it 12 to 24 month radar to make the shift and start saving 6 figures a year in taxes. So yeah, I think it's something that a lot of us should consider. If we're 7-figure entrepreneurs, 8-figure entrepreneurs, it's 100% worth it. Shunek says, hi Mike, lovely to see you live. Since you are saying that there will be a recession, logically all asset classes except maybe gold would drop. So it depends. I mean, some people would argue that Bitcoin or Ethereum could become stronger in the face of a recession, specifically if it's a bit of a fiat collapse in the current inflation environment that we're dealing with. If Jerome Powell doesn't navigate interest rate hikes and tapering well, then inflation could continue to be out of control in the way that it is now. On top of that, even if he navigates interest rates well, a 50% increase in the cost of oil drives the cost of transportation and production on most of the goods and creates a rise in inflation. It drives up the price of contractors, that could drive to your sites and all that, drives up the cost of all the materials that are shipped to Home Depot and Walmart and everything else, drives up your grocery prices. That creates inflation, a ton of it. And people continue to pass those prices on. The bottom consumer suffers because they're on a fixed salary. It's a real issue, especially with the war and everything going on. I would not want Jerome Powell's job right now. I would not want to be at the Bank of Canada right now trying to make policy decisions, because truly they're fucked. That's the only words that I can use to explain the current situation. We will have a recession, 100% chance. In the next 24 months, it will happen. It will also bleed over in the Canadian real estate market. The only thing that keeps me currently bullish about the Canadian real estate market is, 1, short-term rise in interest rates actually fuels the market further and increases demand. 2, immigration's at all-time highs. And 3, but most importantly, in times of high inflation type recessions led by an oil crisis, or I guess followed by an oil crisis, what we see is that commodities tend to do very well, and natural resource rich countries tend to do very well. Now, Canada's energy policies and Canada's a really rich country. We have a lot of natural resources. We have a lot of oil, a lot of minerals, a lot of lumber, a lot of great things that people need. And so again, my portfolio is heavy in the Canadian natural resources and commodities sector. I've done very well in the last few months. That portfolio has done very well. I will say this. I will say that Rusco says Ben Mello trying to take your time. You know what's interesting? I just drove by his place. I drove by Ben Mello's house 3 days ago. I was surprised. It's a beautiful, beautiful property, but it looked smaller when I was driving by it than Someone needs to go in his comments and say, hey, you're taking Mike Rosehart's time slot. Pick a different time. Wednesday at 7 has served me well now for 4 years, so I'm probably not going to change it. I'm just going to leave it. You have to keep both streams open at the same time. Open 2 tabs. No big deal. But yeah, back to my train of thought here around the current recession and how that bleeds over. Typically, we'll bleed over into real estate and cause real estate to lag as well, especially among the speculators. So a lot of the speculative growth. So more likely what we'll see is a flat real estate market, which is good. It's healthy. We need a little bit of a decline. We need a little bit of flatness, especially in Ontario, Canada, where things are insane. In Florida here, things are insane. When people start losing real money and getting margin called on their stock portfolios, that bleeds over into the real estate market. When people are paying double for gas, that bleeds over into the market. When people have fixed salaries and the cost of goods like groceries are now up 20% and will continue to rise there 10 to 20% as a direct result, once the current oil reserves, where we bought oil at, say, half the current price per barrel, dry up and we buy oil at a much higher price, that is going to have major effects in North America and in Europe on direct costs of, say, food and materials, et cetera. One might argue that the cost of rising materials could translate into higher new build costs, which could in theory pass on a rise in real estate prices. So there is some bullish action happening through a high inflationary environment, and same in some of the stocks that you might own. Some of it can be passed on, like Subway could raise their prices and people might still buy. My argument would be people build less and buy less when they have less. So I'm not overly bullish. I'm neutral. Short term, I'm still bullish on Ontario real estate. Middle term, I'm neutral. So I don't think it'll be a huge crash, but I do think it'll be a bit of a pullback. I could see scenarios where there are 10 and 20% pullbacks in real estate, which again takes you back to last September in Ontario. Like, we're talking months ago. We actually need a 10% pullback. That would be like on a hot summer day and we get rain. Like, that's, anyway, I've enjoyed it. I've grown with it. So I'm not complaining here. I've made $1 million or $2 million off of it, so I can't complain that the market's roaring up. But how do we plan going forward, and what do we do to ensure that we are navigating this crisis well? I think one thing is hedging. It's important if you have an equity portfolio right now, you type in the ticker VIX. You can sell puts or buy calls on the index on up days. Up days will be down for the VIX. On days where the market, like today, the VIX is down 10%, I think, today. On days where there's a lot of strength and greed and lack of fear, that's the time to be loading up on what I typically do is a risk reversal. So I'll sell puts and then I'll use the premium from the sold puts to buy way out of the money calls. And then I still have a spread on top of that. So there's a profit even if those calls expire worthless. In most cases, I'll sell those calls in the 30 to 60 days before they expire on days where there's a lot of fear. On days where the S&P or VTI falls more than 2%, those are the days you unload those positions. And it's a hedge. It's designed to protect your equity position. So on those days where you're down, if you've hedged your portfolio, say 40% or 50%, in this market, the more hedging, the better. And there's so much volatility that even if you're wrong and your equities do well and trade sideways or whatever and they don't crash, which I think they will, but even if they didn't, even if we traded sideways, the VIX does very well. You get all that decay on those puts that you sold. You get all that theta decay, which is basically you getting premiums for nothing. As the time duration on the contract disappears, you get all that money for nothing, especially if it trades sideways. So you win if it trades sideways. You only lose if the market staunchly rises up, in which case you still have some equities to ride that up, right? A lot of us are still holding our Google, our Facebook, our PayPal, our Block, our Tesla, some of it in loss positions, right? Like our SAM, I'm still holding my SAM shares. Some people still hold a Newegg and those shitty positions too, myself included. But no, PayPal I think will come back, Square as well. There's lots of great names. I think Palantir as well, down to like $9 or $10 at one point, 20 and 25 and 30 before. So I think that it'll definitely double in the next 5 to 10 years. I'm still bullish on it long term. I just think short term there's going to be more blood before we see green. So that's why I'm overly cautious. I've worked very hard to protect the money that I have this far, and I've always been cautious. And every deal that I get into, as an example, in the real estate space, I'm like, what are 2 ways or 5 ways I can lose money on this deal? And how do I protect against that? So I'm most cautious about not losing money. which is why today I dumped half of my tech position and put that capital into a hedge. I think that'll pay off really well over the coming months. I had a VIX hedge on January 1st that I closed out on January 15th for a nice little profit. I had a $500,000 hedge on my portfolio, which was 10% of my portfolio. Today, that hedge, if I just kept hedge on, is worth $5 million. I would have made $5 million if I just kept my hedge on, which would have offset all of the losses, and I would have made 4-point-something million on top of that. So hedging is very, very valuable. And I think that, if you're careful about it, it can be a great way to enhance returns and protect yourself against downside. Remember Warren Buffett, the 5th richest person in the world right now, and he's rising right now. He's climbing the ladder. He's taking market share from Bezos and from Elon and a lot of other really wealthy billionaires out there, like what's Facebook guy's name? Mark Zuckerberg. And that's because Buffett buys cash flowing, strong businesses. He hedges carefully. He keeps a good pile of cash and he follows fundamentals. And he, most importantly, tries never to lose money. And so that's where you need stop losses. You have to decide at a certain point. For me, those stop losses kicked in around 2 days back. And I said, next 2 green days we get, I'm liquidating half my portfolio into a hedge. That's just me protecting my downside. I would much rather miss out on $1 million in gains than lose $500,000 that's my mindset. I prefer not to lose money. It's a lot harder to come back from a loss. And so wealth preservation is important, guys. If you're watching this, make sure to preserve that wealth. That's my for your opinion today. Okay, the next one was, how soon do you think you'll purchase a home in the Bahamas? We're in contract. We're working on contracts right now. So in the process on that. Mike, hey, lovely to see you live. Gold. So you talked about gold. I like gold, actually, by the way. I think that buying like copper, gold. Copper does very well in electronics, especially with the price of oil. I think there'll be a push for more EV, a push for more automation, because it'll be expensive to send people to work to go back and forth. You'll save on fuel. And ultimately, I think outsourcing and automation is the future. Copper is a resource that's very valuable. Gold is too, from a utility perspective and from a hedge speculation perspective. I still like Bitcoin more than gold, but I do have some gold in my portfolio. Right now, I think, to be honest, in the next 12 months to 18 months, gold could perform very well. It's done very poorly in the last 10 years, and it's time for gold to go back to an early 2000s type of growth cycle. So I think it's definitely something we could see. How does one get American mortgages in Canadian under contract? I might have to relocate, guys. Sorry about that. Do you use a bank? You could open an offshore bank, and it's very common. We see a lot of people in the Bahamas, using offshore banking to accomplish a lot of the same goals that you'd have in, say, the Caymans or one of the other offshore type markets. We miss you, brother. Love your videos. Thank you for the time you give us. Hey, no problem. Thank you, Grateful Forever. Appreciate the comment. Omega says, why does CMHC guarantee mortgages from banks? Any idea why Canada does this? What's the benefit? So Canada has one of the most expensive private mortgage insurance programs, I think, in the world, because it's an upfront fee. Whereas like PMI in the US, as soon as you refinance or you get to a point we've paid down to 80% loan to value, the PMI disappears. It's like a monthly fee that goes away. In Canada, it's 4% of your down. It's 4% of the purchase price upfront at the maximum. So if you put a 5% down, you could, in theory, end up losing your entire 5% down payment to insurance fees. They're compounded against you at your mortgage rate upfront. So if you refinance or sell the property within 5 years, you're looking at a situation where you could lose your entire down payment. So I've never been a fan of CMHC unless there was no other way to get the deal done. So that's sort of my thought on the matter. Fred says, is Mike putting a property under contract which allows him to improve it and then find a buyer, all without ever owning it? Is how it is being financed to buy. So Fred, to answer your question, that's considered an assignment, very common, very legal. I have done tons of that in Canada. I've done tons of that in all around Southwestern Ontario. I do have it under contract. I might assign it. I might have a partner take it down. I don't know, lots of options. If someone's interested in partnering with me on this, hit me up. I have a few people who are down to 50-50 it with me. If someone wants to take the deal off my hands and pay me a fee, I would consider that. I would consider that. I could take that money and just buy a house in the Bahamas. So I would consider that option as well. Ibra says, as an 18-year-old who just came to Canada with no interest in going to university, what quick skills would you suggest to learn to make the highest wage per hour? So in my opinion, the highest wage per hour would be if you were to take computer programming, NFT type projects, crypto projects. Again, all of that is very well. I know friends that are being paid, like a Bitcoin to put some of these projects together. So you can make insane money in like 1 or 2 months. So that'd be one of the highest value skills. People skills. So anything in like sales with real estate or whatever, people skills are super important, and people skills pay very well. What else would be a great skill set to have, I guess? I mean, it depends on your passions, right? There's so many things you could do that you could make money with. And if you don't enjoy what you do, you won't succeed at it as well, right? So I think, I don't know, it's tough. I'd have to know you to really give you a good recommendation, but follow your passions. I think that a good one is definitely, sales, IT right now, tech. What else pays really well? Those are the two that I can think of off the top of my head. But business does well too, depending. Curious to hear your thoughts on Edmonton, Alberta real estate. A lot of friends say it's a hidden gem. So you might be missing the boat on that. I suspect if oil prices stay where they are now, we'll see that Calgary is going to blow up, right? Like with oil prices being less than 2 years ago, oil was trading in the oil futures negative. So a lot of oil operations are just like shut down almost completely. So it's it's a different market entirely than what it was 2 years ago. And there was a bit of a depression, to be honest, in the real estate prices in Alberta. The landlord environment is super friendly, super positive for those who are looking to invest there. So I mean, I would consider, to be honest, I would consider Alberta as an option. It's one of my favorite markets in Canada. Other than, out east is pretty good too. I'd be bullish on that market right now, especially because it hasn't gone through the same appreciation that Ontario has. There's a lot of upside still, I think, in Alberta, and it's a more friendly landlord environment. How would you invest in real estate if you had one property in southwestern Ontario? I'd refinance it, or actually, I'd probably sell it right now, to be honest with you. Like I'm currently selling most of my properties in southwestern Ontario, and maybe I'd buy something in one of the other markets out east, or maybe out west, where there's still opportunity. BC is horrible. Avoid BC. It's like Ontario. It's tenant friendly, so it's not a great place to invest. It's as bad as, say California. Mike, where do you find stocks to short if you're bearish? So, Eric, a great way to protect yourself if you're bearish. I don't like shorting. You guys know I've made my mistakes with shorting, and I think that shorting is a great way to lose a lot of money quickly. It's better if you're bearish to just apply hedges like the volatility index VIX. If you're wanting to play the market down, there are a ton of ETFs that'll play unlevered. I think you just need to stay away from leverage. You need to stay away from shorting, especially when you're in the negative direction, because it can go against you quickly. But there are definitely a lot of indexes out there that play the market 2 times bearish, so 2 times against what you're doing. So you can buy in cash, things like that. And if the market were to dip, 10, 20%, you could make 20 to 40%. So that wouldn't be a bad idea to put a little bit of that in your portfolio as a hedge, or even if you're just bearish in general. I think you wouldn't do poorly in the short term. You got to be very careful, because those types of positions over the long term will destroy your portfolio. Remember, over the long term, the market only goes up. So we're talking 5, 10 years from now, totally different than I'm talking short term. Short term, I'm bearish. Long term, I'm still bullish on most of the companies I talk about on here. Thank you, Mike. Appreciate the reply. Have you ever bothered with land development? Is it worth the hassle with environmental impact studies, et cetera, or an already approved plan? So, Omega, great question. If you go back 2 years on my YouTube channel here, you'll see a video I did on a small subdivision that we did. We severed property into 4 quarter-acre, $1 million lots, and it was a horrible process. And I didn't get my contracts ironclad. The municipalities come after me. I'm running services 2 years after I sold the lots at now triple the cost that they originally quoted. So it was a horrible mess. We made money, but it was not worth the headache. I could have made more money easier. With development, if you have the right connections and you have the right people on your team and you have deep pockets, which means you can hold for 2, 3, 4, 5 years if the city delays you. It takes years. You think it takes months, it takes years to get things done. And yeah, I would say that that it could be good. I don't like development plays. If I have a cash flow play and there's a development piece where we can sever it, I'm open to those types of opportunities, but I don't typically buy for development in and of itself. I'm not interested in that at all. Again, I've dabbled with that and found that it was not as fruitful as it could have been. How does one get an American mortgage under contract? So I don't know what you mean by under contract. So you buy a property, you put it under contract. A mortgage, you'd have to apply for and get an approval. There is no putting a mortgage under contract. Yeah. Yeah, as Canadians, we don't have 30-year fixed mortgages. We have 10-year fixed mortgages and 15-year fixed mortgages, which are actually relatively affordable. I prefer the shorter term mortgages. I think long-term rates will hover within 1% of where prime is now. That's my forecast. So there isn't a huge advantage to the 30-year locked in, but I can see how people would value that. A lot of my portfolio, I never planned to hold for 30 or so years, so it didn't matter to me. Real estate, for me initially, was a means to an end, right? It was a way to get financial independence. It's a way to build wealth quickly. It wasn't something I loved to be doing. Like, we had an electrical fire tonight at one of our properties, and like, that's not something I want to be dealing with. Anyway, part of that is because I don't have good property management right now in London. I'm looking for the right person for that. But I'm selling most of my properties anyway, so. Jen says, hi, Mike. I'm a small fry with a personal residence and a few rental properties. By the way, Jen, that's not a small fry. The average real estate investor becomes so you're a top 5% real estate investor if you have just your primary residence and one rental property. You're it's top 5%, top 1% if you have 4 rental properties or more. So it doesn't take much to be in the top 1%. To be the top 0.1%, you only need like 10 or 15 rentals, which again, I don't think is that hard of a goal over a lifetime. It's really easy to be a top investor in real estate. Thank you, Jen Cotton. I appreciate that. Love your content and learned so much over the years. Thank you. Hey, no problem. Happy to help. Eway says, what's your year-to-date P&L on stocks, up or down? So I have 2 segregated portfolios. In my long-term dividend portfolio, where I typically hold blue chip, commodity, utility, stuff that pays really good dividend stuff, and blue chip and very stable and predictable, mostly Canadian type equities in that portfolio, I'm up 3% year to date, which again, compared to the S&P 500, which is down, and the NASDAQ, which is down like almost 20%, excluding today's bump, that's pretty good. The other portfolio, which I talked about earlier, tracks the NASDAQ as a benchmark. And I options trade inside that portfolio, and I expose myself mostly to growth in tech. And in that portfolio, I am down, I think, 12% year to date since January. So, yeah, it's better than the 20% on the NASDAQ, but I'm holding, again, names that I really like Facebook, that's down 49% and has a PE ratio of 13 or 14 right now. We're talking value play, priced growth. And it's not all the way beaten up as far as it could be, sure, but we're getting pretty close to a price that I would start dollar cost averaging in. Again, I wouldn't do a huge position. I wouldn't be on margin. The road through this next recession is going to be a bloody one. And Facebook could continue to decline 20, 30%. But 5 years from now, 7 years from now, I feel really bullish about a double or a triple on some of the current tech play pricing. Do you still own real estate in London? Yes. So I currently own 6 rental properties in London, plus my primary residence estate still, which to me is a small portfolio. But yeah, I technically still have some properties. I'm trying to get rid of everything. It's all going up for sale. I'm actively, most of them are vacant, to be honest, as I work towards getting them renovated and cleaned up and whatever. I'm not actively looking to do much as far as like landlording. I have no interest in that at all in Ontario specifically. Airbnb is the way I would go, because then you're not, anchored to any one tenant. You're in full control. And I like that. I like being in control. I don't like having a tenant that owns the property. The current laws are not great in Ontario. So. You did scale significantly your real estate portfolio after quitting your job. Looking back, what would you do differently as far as scaling your rental portfolio, or would you totally go a different route? So Yuri, in hindsight, I wish I would have bought Bitcoin when Bitcoin was 3,000, 900, 500. Huge regrets there on that piece there, that I got too late on the bandwagon or the train. As far as scaling my portfolio, the biggest mistake I had was joint venturing with people. I did joint venture partnerships where I assigned in London in 2019, I assigned 54 properties. At the time, in 2019, I was the largest wholesaler in London at that time for that year. And so there was no one that was wholesaling and assigning more properties than I was. This was mostly before I got my real estate license, actually, late 2018, early 2019, and in 2019. However, I got this crazy idea that I would assign properties for no wholesale fee. And I would assign them for a JV partnership for a piece of the equity. But I wouldn't register on title. I wouldn't register a second mortgage to protect my equity. I would just trust with a JV agreement, in some cases a handshake, that people were good fucking people. And turns out, lawyers in Toronto and many other people who I did business with were not, especially realtors, were not good, honest, reputable people. And in the end, ended up paying me 1/5 to 1/10 what I was entitled to. And in many cases, people would ask me to do things. Hey, Mike, you're retired. Why don't you just manage this renovation for me? Sure, no problem. And then they wouldn't pay me back when I would pay the contractors for them. Not only did they pay me nothing for my time, they didn't even pay me back for the money that I put out. So I learned a lot of valuable lessons while scaling. If I had just borrowed money as private debt and gave no equity up and closed all those deals myself, I'd have an extra $15 million today. So, you live and learn. Yuri. That would be one of the things is, and by the way, I did have a few great joint venture partners along the way too. Probably half were great. And so I'm not throwing shade. If one of those people watching right now is one of my good JV partners, you know who you are. I would still partner with some of you guys today. Great, honest, reputable people who did exactly what they said they would do, paid exactly what they said they would pay. So there was good people too, but turns out a lot of people are shitty. People who you'd think like lawyers and in some cases, like people who are professionals, you would think would honor their word and are actually greedy sleazes. So anyway, always secure on title, your equity. If you don't secure on title and don't put your name on title in any way, at least put a second mortgage registered on title that says, hey, I have an ownership here. They can't sell it without your signature. They can't do anything without you being involved in the deal. Have some control. Title is everything. So I learned the hard way that mistake, but it's okay. It is what it is. I did a lot really quick, and I came out of retirement and made a boatload of money, more than I, ever thought I would need. Let's see, if you got any offers on Bullard, 6-bedroom house in London. So I don't have a property named Bullard. I have a 6-plex that's on MLS right now in West London in Byron at 337 Bowler, Boler Road. It's listed for 1.479 million. It's fully vacant. Could do 10, 12,000 a month on Airbnb pretty easily. It's a beautiful, fully renovated, turnkey 6-plex. I really like that property. If I was staying in Canada, I would keep that property. It was the last one that I wanted to sell. I do have a partner on it. He did a great job renovating it all. He wants to cash out. I'm indifferent. We could refinance it and keep it, but it is for sale. If someone wanted to throw in an offer at like 1.45 with a little bit of vendor financing, I might consider that. I'm flexible. But yeah, that one's a 6-plex, not a 6-bedroom. So 6 individual units, as well as a sort of a 7th unit in the basement that's more of like a storage crypto unit, as well as laundry. So if you're interested in that, hit me up or hit AJ up, who's got it listed right now. SEO Sam says, you're my favorite person to follow on Instagram. Fun and adorable family, stocks and investing, real estate and political viewpoints. I agree with. I'm wishing you and your family a continued fun trip in Florida. Thank you, SEO Sam. I appreciate the positive feedback there. That makes my day. Thank you for that positive comment as well. Yeah. Oh, thank you guys. So many great comments. Okay. Thank you for sharing all your experiences. No problem. It happens. It's okay. I'm a big boy. I can handle the fact that the world isn't always fair, and that's just part of business. People are not about the long term, right? They're not about developing those long-term relationships in some cases, right? And it's just always get it in writing, always get it registered on title. Those are things I've learned along the way. Even honest, good people, it's smart to do that. Okay. Yeah, I think I threw all the comments tonight. So we did a good little 40-minute stream. If I missed something, obviously follow me on Instagram, Mike Rosehart. You can go on there and you can send me a message or put a comment in this video. If you're watching the replay, smash the like button for engagement. Thank you so much. It means a lot when you smash the like button. Throw a comment in, say that you watched it. I appreciate it. I check out the comments and I do read them. So I appreciate when people do help me out there with that. So have you had an experience with all your units on Airbnb at once? Yes, I have. There can be some in-unit issues, but if you run it well with good systems and they're quality units, you'll be just fine. So yeah, I would say that I'll see you guys all next week. Remember, the secret to unlocking wealth through you is to spend less, earn more, and maximize returns on the difference. That's it. Those are the 3 secrets to building wealth. You follow those 3 things, that's the equation to getting rich, getting financial independence, not having to work a 9-to-5 job, and do what you want to do with your life. So thank you everyone for watching. We'll see you next week. You know where to find me. Yeah, it would be great if everyone watching this right now could just smash that like button. I know we have 18 likes, but there's 54 people watching this right now. I know we've had another 150 people jump in and out. You guys need to smash that like button. It helps my engagement. I'd appreciate it. There we go. Got some likes going in. Thank you so much. We'll see you guys next week. If you're interested, by the way, in investing with me in either the Bahamas or Florida, hit me up. I am very, very interested in partnering opportunities where we write a clear JV agreement, where we clearly both go on title. There's no funny shenanigans. I've learned a lot. And so if you're reaching out and you don't know me, or you know me and I don't know you, let's have a conversation. You definitely need to be a 7-figure to do a partnership, but hey, maybe there's something there. Maybe someone watching this is like, hey, I want to get on that building in Florida. So if that's you, or you want to just buy the contract from me, I might be open to selling it. It depends on your offer. All right, everyone. Have a good night. Stay safe.